Greetings everyone. Myself Kushi Bhanushali and today I will be presenting on the topic Power of GST over VAT. In this presentation I will explain how GST replaced VAT, the key differences between them and why GST is considered a stronger and more efficient taxation system in India. Before understanding the power of GST, it is important to understand what VAT was. Value added tax was a state level indirect tax mainly applied on goods. Each state had different tax rate and rules which created lack of uniformity and complexity in the tax system. Although VAT allowed input tax credit, it was limited and not fully integrated across the country. Goods and service tax was introduced on 1st July 2017. It replaced VAT and several other indirect taxes. Unlike VAT, GST covers both goods and services and follows a unified structure across India. The main objective of GST was to simplify the indirect tax system and create one nation, one tax. Differences. First, in terms of scope, VAT apply only to goods, whereas GST applies to both goods and services, making it broader. Second, VAT was administered separately by state, leading to different tax rate. GST follows a dual structure involving both the central and state governments with uniform tax slabs. Third, input tax credit under VAT was limited. Under GST, credit is seamless across goods and services, which prevents cascading effect. Lastly, VAT rates and rules varied from state to state, but GST has harmonized rate across India, improving predictability and easy of doing business. These differences clearly show how GST is structurally more integrated than VAT. To understand this better, let me explain with a simple example. Suppose a product costs rupees 1000 and the tax rate is rupees 10%. The wholesaler adds rupees 500 value. Under VAT, the manufacturer charges rupees 100 tax and the wholesaler charges rupees 150 tax on rupees 1500. Credit was not fully seamless, so sometimes tax on tax increased the final price. Under GST, the wholesaler charges rupees 150 tax but claims rupees 100 as input tax credit and pays only rupees 50 to the government. This means GST taxes only the value added effect and removes cascading effect. GST had significant real impact in India. It reduced interstate trade barriers by removing check posts, which improved transportation speed and reduced cost. It introduced digital compliance through unified online portal, increasing transparency and reducing paperwork. By eliminating cascading taxes, GST can reduce final prices for consumer. Also, the invoice-based credit system discourages tax evasion and improves revenue collection. Thus, GST strengthened the overall indirect tax system. The main advantages of GST include removal of cascading effect through seamless input tax credit. It created a common national market with uniform tax rate. It expanded the tax base by including services. It simplified compliance through standardized procedure and digital filing. And most importantly, it enhanced transparency in tax administration. To conclude, GST is more powerful than VAT because it provides a unified, transparent, and efficient indirect tax structure. It reduces tax burden through seamless input tax credit and eliminates cascading effect. Overall, GST has modernized India's indirect taxation system and improved easy of doing businesses. Thank you.